Hey guys, how's it going? Thanks so much for joining us for yet another episode of Study Crypto. Please, today we're going to talk about these daily ROI Ponzi's and your best way to stay safe and get paid. Best approach to get paid and not get played. All right, but before we get into it, please do us a big favor. Please hit the like button as well as the subscribe button and ding that notification bell as well. We really appreciate that. That helps with the YouTube algorithm. And as always, crypto investing is high risk, and I am not a financial advisor. This is not financial advice, it's only for entertainment and educational purposes only. But with that said, as you know, our goal here is to help everybody win and do well with crypto, their crypto investing, and their pursuits in building wealth. So, as always, thank you for your support. And speaking about support, as you know, there was some light that was brought to some of the daily ROI projects that we talk about a lot here, which are really popular and can help you build your bags quite nicely. However, the truth of the matter is they're for the most part scams. And we had a previous video, I'll link that in the show notes, that shows how you can detect whether or not a daily ROI platform has already either been drained or been rug pulled or the scam was complete. And the truth of the matter is these things are scams because there's, as we talk further, you're going to see there's no way that they can offer these rewards on a consistent basis, sustainably for long term. They're made to go up and then be brought right back down after people get paid. But again, there's ways for you to participate in those and not get hurt. I'm going to talk about that. But first, I want to talk about the commenters and the community. Much respect to everyone who made comments on one of my videos where I was talking about a Ponzi, one of these Ponzi daily ROI projects. But the Ponzi had basically stopped distributing coins to people, and I wasn't aware of it. I had filmed the video the previous day, and that came to light through some of the commenters when I had the video airing, and simply the fact was it was dead. It was a dead contract. And again, I have a video about looking at some other dead contract protocols that are still up and running. You can check it out in the show notes. But what I wanted to do is say definitely a thank you and much appreciation to the commenters who commented on the video and brought this information to light for me and helped me figure out further my education in the crypto investing world. And I want to give a special shout out to them. Digital CLAVE, I believe is how you say it. Jacob Goldsberry, Investing for Purpose. Amaresh, I'm not sure how to say that last name. And Dani Sniper in Training. And Karim, Ahmed. I hope I said everybody's name correctly. Thanks so much for your comments. They helped me out a lot, and I was able to help out some other people. And what I'm going to do too is I'll have their YouTube channels in the description notes, so you can go follow these guys as well. Definitely appreciate it. And because of what you guys helped me out with, I'm going to offer you early access to our NFT collection. It'll be on the whitelist, and you'll be able to get it for free. We're gonna have a few collections coming out, and if you're interested, in the next 72 hours or so, if you could just email me at studycrypto@gmail.com, which is our email me the wallet address you want us to send it to. It's going to be on the MATIC. It's on the MATIC network. Okay, so it'll work perfectly with your MetaMask. So it's going to be a MATIC NFT. But yeah, just wanted to say I appreciate that. We appreciate that here. And this is how the community grows, right? We all share information in our best efforts to help everybody do well. Okay, so just wanted to give that shout out to them. Thank you so much, guys. All right, moving on. So, daily ROI Ponzi's. Now, what is the best approach to get paid and not get played? I talked about this a few times. Your regular basic safety that I spoke about. I have a safety video. I'm not going to get into that now, but particularly for these Ponzi's, as you know, they pop up and they're dead within 21 days, 28 days. Usually, they don't even last a month. So the key is get in within the first few days of the launch, or forget it. Don't do it because you're likely going to get in too late, and you might get caught out there. You might be caught holding the bag, as they say. Okay, so get in within the first few days, or just wait for the next one to pop up. Okay, get in ASAP. And when you get in, don't keep your money in there for more than 14 or 21 days max. Because again, the contract balance is likely to be drained out after 14 to 21 or definitely 28 days. I don't see any of these lasting longer than a month. Most of them are always dead after a month. Okay, meaning if you have any money in there, you're not getting it out because it's already been drained out by whales. Now, again, it's hard for me to actually say whether it's a specific rug pull or it's exactly nefarious, but just due to the way these things work, if a large whale comes in there and puts balance in there, and they're doing 20% a day on their money, when their time expires, when it's time to withdraw, they're withdrawing out all the other money that's in there from everyone else. And when the contract is empty, it's empty, it's done, it's gone. There's nothing in there. It's just the way of these contracts function. Now, I have seen some companies with some of these daily ROI strategies put out some insurance and things like that, but who knows? I doubt that's going to work. I think it's just another ploy to get people to participate so the whales can, really rack up their coins. But again, if you play it safe, the whales tend to pull out after, 21 to 28 days. If you pull out within 7 to 14 days, you can wind up doing very well. Okay. We'll look at an example of that in a moment. And thirdly, ignore the audits. Ignore them. These audits are full of crap, right? These audits uh, from these non-reputable companies. I'm not naming any names, but audits from non-reputable companies, they just aren't going to do you any favors. Okay, so just ignore those and just work within the parameters of understanding what you're getting into, which is quite honestly this Ponzi that's going to be gone in 30 days. But just to give you an idea of what's possible here. So if you look here at this particular protocol, this is the latest one that's up and running, Fantom FOMO. If you look here, let's say you did the 21-day pool, okay? Let's not even say 21-day. Let's keep it real conservative. Let's say you did the 14-day. If you did the 14-day pool, which is plan 4, you're going to get back 2.34 FTM, okay? Which is basically you're getting back a total return. This says total return of 234%, but again, they take away your principal, so it's really 134%, right? That's really what's going on here. So you're getting back, you're going to get back, you're getting back 2.34. So you're turning 1 into 2.34, okay? So that's pretty good, right? So think about it like this. Let's say you're able to do that twice a month. Well, just keep in mind, even at 134% return, okay, because you're considering the principal. They take away your principal, so you're really getting 134% return. Even if you're doing 134% return, you do that every 2 weeks. That's about 300%, a little less than 300% return monthly if you participate in these. So that's really good. Okay, if you just stay in the smaller lane, you do 14 days, you're basically, and you do that every 2 weeks with a small amount of capital. We're going to talk about capital allocation in a minute. You're basically able to do 200 to 300% return on your money, which is really outstanding. I mean, there's high risk there, absolutely. But again, these Ponzi's are likely to fail after 30 days. They aren't likely to fail after 14. After 14, they're still trying to get people in and it's still expanding. So just keep that in mind. 14 days, if you just stay with these smaller pools, you could still do well. But the key is you go in, you get your money and you get out. Okay? Okay, you go in, get your money and get out. If you participated here, and if you wanted to just say you, and again, this is locked. So this is locked. Keep that in mind. This is a locked protocol. So you have to wait till at the end of the 14 days. But let's say you want to play it extra safe. So let's say that you put it in this one, plan one. Well, this is giving you 26% in 14 days, just 26%. Again, it's giving your initial capital back, but you can withdraw anytime. Okay, so if you just went with this one, if you're doing the 26-day one, and let's say you withdraw every day to ensure that the rug pull activity is minimal, it means you're less likely to get caught up. Okay, you can still get a nice 26% return on your investment every 14 days. That's over 50% a month. Okay, and you have a little bit more control. You have a little bit more safety, a little less of a headache and risk because you're not locked into it. Okay, you're not locked into the protocol. So even doing this, 50%, you're doing like 50% a month. Okay, on your coin, that is really good. All this other stuff is just chaotic to just draw people in. But even if you just stuck with this, 50% is really good. Okay, so like moving forward, this is the kind of strategy I would recommend. If you wanna take advantage of these, stay in like plan one or plan four, where it's just 14 days. I wouldn't even go as high as 21 days anymore with these things. But moving on. So yeah, that's pretty much the big ones. Get in within the first few days of launch or forget it. Don't keep your money in for more than 14 days because it's gonna vanish. I mean, that's just the name of this. It's a shell game, folks. And ignore audits by less reputable companies. Okay, Surtech Audit is a very reputable company. Paladin is a very reputable company. So ignore audits by less reputable companies. And here's the big key: don't risk more than you can afford to lose. Dear God, don't do that. Okay. A good rule of thumb that you can keep in mind, at least how I roll, DeFi should make up less than 25% of your overall portfolio. 75% of your portfolio should be in large cap, top 10 or top 20 assets by market cap. So large caps. We're talking about the Bitcoin, Ether, Solana, Luna, MATIC, all those. That should be the majority of your portfolio, for safety reasons and for long-term appreciation if you're in this for the long term. This quick hit DeFi stuff that we're talking about, this daily ROI stuff, that should be a very small part of your portfolio. Honestly, even in your DeFi portfolio, it should be the smallest part of your DeFi portfolio because there are a lot of reputable DeFi platforms out there offering real returns that are far low. I mean, lower than these advertised crazy scammy returns, but they're more sustainable. They have far more TVL locked, total value locked. They have billions of dollars in them, and they're offering really solid returns, better than regular financial institution stuff. Okay, so I put in my DeFi strategy, I'm grouping everything together. But again, in my DeFi portfolio, out of that 25%, the smallest of the small percent goes to daily ROI DeFi plays, because that, ladies and gentlemen, is the scammiest, riskiest stuff out there. Okay, by far, there's nothing even close. Okay, so just keep that in mind, and it should be such a small part of your portfolio. I try to only invest the minimum amount most times. I mean, that's my personal strategy. In any event, Let's move on. In DeFi daily ROI platforms, like I said, they're the bottom of the barrel, and you can't sustainably give out 5% a day of a major layer one coin in any of these projects. Just know that going in, it's not sustainable. A project that's offering you 20% a day of AVAX or MATIC or FTM, that is an illusion. That's the Ponzi. That's craziness. It's not going to last long. It's designed to fail. It's just a matter of whether you're going to take the ride down with the ship or you're going to be able to escape with the loot off the boat. Okay. And so number three, just to give you a portfolio breakdown, no one protocol, in my opinion, should have more than 5% of your overall portion for DeFi. And here's an example. You have a $100,000 portfolio, and that means 25% maximum set aside for DeFi, including all the DeFi plays, the less risky ones and the crap stuff, the daily ROI stuff. So in this scenario, only 1K to 5K set aside for each project in DeFi. Again, when it comes to daily ROI stuff, I would make that a lot less. Okay. And lastly, for this point, all daily ROI platforms offering layer one coins are short-term scams that, if you time correctly, can be profitable. But as we've said, they are the riskiest thing in DeFi. So just know that. All right, guys, thank you so much. Let me know what your comments are. Let me know what you think. Put them down below. I really appreciate you guys. I really appreciate the community. I'm just out here reporting, what we're doing and how we're doing it and what we find. And if you want to invest in any of these, by all means, do so. Hope your endeavors are successful. And, we lost money in some of these as well. All right. So, we're all in the same boat here. We're just trying to help each other stay informed and, navigate these crypto waters and, find these goals and get this wealth. Okay. So again, this was not financial advice. I'm not a financial advisor. Like I said, crypto investing is always high risk. So do proceed with caution. And please, if you enjoyed this information, hit the like button as well as that subscribe button. And we'll catch you next time. Thanks so much. Talk to you soon. Hey guys, thanks so much again for viewing our wonderful video, and please don't forget to hit the like button and the subscribe button if you found value in this, and please ding the notification bell as well. Thanks so much. See you next time.